today, mind your P's and answer your Q's. Information about the PPP, or Paycheck Protection Program. The Quad Cities Chamber strives to be your one-stop business resource to assist during the coronavirus pandemic, connecting you to reliable and accurate information. There's a lot of new information to process every day and respond to during these rapidly evolving and uncertain times. And the Quad Cities Chamber is here for you, advocating for your business at the state and federal levels and providing resources to help you protect the health of your workforce and your operations. We're committed to bringing you the latest information as quickly as possible. Our COVID-19 resource page on our website, quadcitieschamber.com, is updated several times a day, so be sure to go there for the latest updates, both on the blog and in our resource guide. If you haven't signed up for our e-news, you can do that by scrolling all the way down to the main page on our website, and there's a box that says sign up for e-news, so you can do that. And we will get through this together. Joining us today are Melissa Pepper and Allie Girardin of Total Solutions. Melissa serves as the president for Total Solutions, and she's a high energy leader with experience in marketing, public speaking, and leadership development and business development. Melissa oversees all areas of the business with a special focus on integrating services to meet client needs. So in her tenure as Total Solutions, she has led the company's new brand awareness campaign and added services to their suite of offerings, including an online training platform and marketing services. Also joining us is Allie Girardin, and Allie joined the Total Solutions team in January of 2020 as an accountant. Her prior role was for a local public accounting firm in South Carolina that focused on small businesses. In her prior role, she was responsible for client relations, producing financial statements, payroll and payroll tax processing, accounts payable, end of year W-2 and 1099 processing, and some corporate tax prep. So she is well versed. She now prefers to focus on preparing and analyzing financial statements while building relationships with clients to enhance their accounting understanding. And we want to thank both Melissa and Allie for presenting today. We will take questions from participants today if time allows. So if you have any, make sure you enter those in the question box. And you can enter those at any time. This webinar will be recorded and will be posted on the Chamber's website. It's for informational purposes only, so we have a lot to get through. And from here, I'd like to turn it over to both Melissa and Allie. Welcome.
Well, thank you so much for having us. We're so appreciative to have the opportunity to share all that is in our brains, on our hearts, on our minds. I'm sure we're not the only ones who have poured over the resources online about this topic. And then just in general, wanted to say to all of you that we're with you as we've been working with small business owners and hearing your stories and your concerns. And the Paycheck Protection Program is certainly an opportunity to come together because there's a lot there. So we will be walking through today. I'm sure you saw kind of our agenda, but we'll be talking a little bit about, for those of you who have, you've submitted your applications perhaps, we'll be talking a little bit about loan forgiveness. If you are submitting right now and working with a lender, we'll talk a little bit about the process for that. And then hopefully we'll have some time, I think we will, answer your questions. So because you're all muted, so we can't hear your kids, your cats, and your lawnmower outside, use the chat for all questions because really where I think have the most fun to interact with all of you. Without further ado, I think we should get started. Payroll cost. This is where I think we should start at the very beginning, which is what is considered monthly payroll cost. Now you might be thinking, well, gosh, well, I haven't even pulled up the application yet. Don't worry, we'll get that, but you really need to get, this is the meat when it comes to your application. So we wanted to start here. What is considered a monthly payroll cost?
So the monthly payroll cost, it's going to be your employee compensation for up to $100,000 per individual. This also includes your state unemployment tax or your SUTA, and you can also include your employee benefits as healthcare, retirement, 401k. That's all going to be considered in your monthly payroll cost for your application.
Yes, and you can look at either your calendar year from 2019 to determine that average monthly payroll cost, or you can look at the last 12 months. The options, how fun for you. And so you'll get to, I'm sure you have this, if you have a pay provider, they can probably give you a report that includes this, or if you have your own books, your own payroll. But either way, those are what they consider for that monthly payroll cost. So you have that number handy. Now you're going to, you've already selected your lender. Surely you have a bank, different banks have different caps and things. So then what do I do? I've selected my lender, I have my monthly payroll cost. Allie, now what shall I do?
You have a couple more things that you'll need for your application. It's all items that as a business owner you should have access to, like your EIN, the monthly payroll cost. You'll have to know how many employees you've had, and then there's 8 simple yes or no questions that are very straightforward, and then you can provide it to a lender. They will require additional documents. That's going to vary by lender. Usually they include payroll reports, operating agreements, bylaws, your NASIS code, and maybe a driver's license. And I did look today, the second round of applications are still being accepted. They're expecting it to go on for maybe another day or two before.
You cut out there right at the very end, but yes, I know that there were some computer glitches yesterday when the application or the portal for lenders went live, but I believe that that was what was made right later in the day. I do have a question here from Tamara Parkinson. She says, do we take into consideration temporary employees? So if the temporary employees are not included like W-2, that they were your employees, this is kind of similar to like an independent contractor is my understanding, but Allie, I'll lean on you for more guidance. Do not believe that they would be included because you wouldn't include the way that if I have paid temporary employees before and how they're represented on my books is that they are not included in my payroll cost. It's an SG&A expense that I have below the line, if you will. So I would not include temp employees. Is that the way you understand it, Allie? Ooh, you're still muted. Uh-oh, we're having a technical difficulty. It's like the world, it looks like she was saying, yes, that's the way that she understands that answer as well for temporary employees. So while Allie is working on her sound, which I hope is not a forever problem, I'm going to work on the next question, which is, you got the money. So some people have even asked, like, well, how does the money work? Do I get it per my payroll period? Is money deposited into my bank account? How does that work? And the question is, the answer is that it is deposited in a lump sum. At least that has been our experience and the experience of our clients. So you will receive that 2.5 times your payroll cost, that number, after you've gone through that kind of like review process with your lender, which may take a couple of days. You're going to be working with a human person, probably here locally, that works at a bank that you know, and they're going to be working through those documents with you and double checking. And then you'll decide on a close date. And in the age of COVID, the close will probably be electronic, signing things electronically. And then you would see those funds in your account not too much after you've electronically signed and closed on your loan. So you've closed on your loan, the money has been deposited. What questions do you have about that so far? We've applied. We've created a monthly payroll cost. One of the other things that is that number of employees. For the purposes of application, it's who was on the payroll average per month in the last 12 months for the application. Now, the reason I'm being really specific with that is because thankfully for us, it's a different calculation for the loan forgiveness. So don't get too high on this, but when you put in your number of employees, it's the average number that was on the payroll over the last 12 months for your application. Any other questions? All right, looks like we might have. Once you get the funds, when can we start applying to my payroll? You can start applying it to your payroll for future payrolls. Does that make sense? So if you got your funds today, and your payroll is Friday, you can use them for Friday's payroll. Right away.
Yes.
What about anonymous attendee wants to know, what about part-time employees? Do they count? Yes, they do count. For the purposes of the application, part-time employees count as, and I keep on saying for the purposes of the application because we're gonna have some fun in a little bit talking about loan forgiveness. All right, Allie, is your sound?
Can you hear me?
Yes, we can hear Allie, the accountant's back. All right, let's move on to the next slide. Thank you all for your questions. As an owner, am I allowed to pay myself as well? You know, Reg, I don't know the situation for you specifically as far as how your company is organized, but if you are currently paying yourself via payroll, and you're on the payroll, you're an owner, you may. But I don't know how your situation is set up. But if you are currently including yourself on your payroll as an employee, then you would continue to do that with your payroll protection funds. Thank you very much. You got your money, you're dancing on the table. This guy, maybe he's 6 feet away from his coworkers here. Let's move on. Tracking your PPP funds. All right, Allie, take it away.
All right. So everyone can hear me. Yes, Melissa?
I can hear you.
Okay, perfect. All right. So once you receive your money, you do want to make sure that you are tracking it. This is going to come in play to help with your forgiveness. So this is kind of just a little bit of a mock-up just for an example purpose. So we have a company called KSG, and they received their money on April 15th. They were able to get in with the first round of processing. From their application, they have calculated that they have an average monthly payroll of $40,000. Their monthly rent is $12,000, and their average monthly utilities are about $3,000. So they received their money, $100,000 for on April 15th, and that just happened to be the day of their payroll as well. So they were able to use their PPP to pay for their payroll. This payroll was only $13,000 because they had to make cuts and they had to lay some people off. And so, you know, they used that for that. The next time they had payroll, they were able to hire some people back because they had their funding and they increased production. So their payroll was a little bit higher. Move on to week 5, you know, they were able to get back to that $20,000 a month. They were able to hire more people. And then finally, right before the end of their 8-week period, they were able to pay a little bonus for someone. They were able to hire another person back. And they were able to use that 75% of their PPP loan for all payroll costs. Well, the other 25%, the SBA has said that you're able to use for rent, utilities, and mortgage interest. So they were able to use that remaining $25,000 to pay their rent for April, their utilities for April, and a part of their May rent. Still within the guidelines. You would want to use some type of tracking. This is a simple version, and that way you're able to provide that to your lender, and they'll want additional documents as well, proving all these amounts, but that way you can utilize it the best.
Yes. So this, like we said, certainly a simplified version. We know that you have countless companies represented on the call, and you might be thinking, well, this is an uber simple version. Well, we didn't think it was wise to say, hey, let's look at a really complicated version of something that already is kind of complicated. So we believed that a simple version made more sense to just sort of really break it down. What do we care about? We care about the money that we received and using at least 75% of it for payroll. That's the first thing we care about. The second thing we care about is keeping our employee number up. Why do we care about these things? Because we want the loan to be forgiven. If we, and some of you are asking if these slides are going to be provided afterwards because you love these slides so much. And yes, they will. The chamber will send you slides, this template here in an Excel file that you can edit to your heart's content. And then also we'll have a one-page resource document with all the questions and our answers on the back of it. So we really want you to keep the conversation going and have these as resources. So when it comes to forgiveness, your lender is the one who is making the final call. So we are not lenders. We do not work at a bank. We cannot tell you what your lender is going to require as far as documentation, but you're going to request forgiveness from your lender, and then they will ask you for supporting information that will be in the form of those two buckets. Did you use the money for payroll? And did you keep your employee count up? So your employee count, unfortunately, is different, like I said, for the loan forgiveness portion. And I will send you, and on the last page, there's some resource links. But what the FTE is what's used over, you can choose 2 different time periods to look at what your average FTEs are. So you can look at last year, February to June 30th, February 15th to June 30th, and look at your average FTEs during that time period. Or you could look at January 1st, 2020, February 29th, 2020, and look at that average FTE. So an FTE is full-time equivalent. So someone that worked from over 30 hours is full-time. Someone less than that would be an FTE, which would be a 0.5. So you're gonna wanna do some math and figure out, you might have an easy calculation. I've got 12 salaried people, 12, they've been 12 they were 12 this whole last year, they're 12 all this year, and you have a very easy situation on your hands. If you have a little bit more complicated scenario, you're gonna wanna, well, actually, Allie, you used a nice spreadsheet for that too for a couple of our clients. So we can send an easy calculation for you for that too, because you'll see this column here, this payroll 415, the number of FTE paid. You're going to want to keep track of this and make sure that over the 8 weeks between April 26th and June 30th, which is the new guidance that was put out on Monday, so that April 26th to June 30th, you're going to want to make sure that these numbers on average aren't dipping below your number over here, which is kind of your baseline of this is what I need to do, and then this is how I get there. Wow, we've got a lot of questions coming in. Let's take a look. Can all payroll taxes that are company paid be used in the 75%? You may use everything but federal.
Mm-hmm.
Can we use equipment interest as well? So they did not, I did read something yesterday that said you may not. So like the building that you are in, like that, but not equipment leases. That's a good question. Thank you, Myron. Let's see, does the 8-week period start as soon as we get the funds? I.e., if I get my funds on April 15th and I start my payroll application to the PPP on May 15th, I was closed from April 16th through April 30th. So the 8-week period begins when you receive the funds. So
unfortunately, you do have to use it as soon as you receive the funds. It starts the clock. I know that a lot of the stuff I've read there's hope that the SBA may come out with a little bit more flex, but at this point, it is the day that you receive the funding is when the 8-week clock starts, even if the business has been closed.
Yes. We provide overtime to employees. Does overtime count towards the FTE? So you're looking at that total hours worked. But I don't think you can be a person and a half. So if I worked 50 hours last week, you don't get to say which I don't know, I don't think you would want to. I don't think that would be in your favor anyway, for the purpose of this far right-hand column. That's not going to be in your favor. So yes, overtime hours are included, but no, if I work 50 hours last week, I'm not a 1.5 person. Does that make sense?
Just one. Mm-hmm.
Yeah, still just one. Let's see here. Oh, I don't want to miss any. So part of the PPP, I hope I didn't miss any. Some of them just, so part of the PPP program says payroll plus 25%. Is that in addition to payroll taxes and 401k contribution? So I'm not exactly sure what the 25% is, but the lump sum that you're receiving is using a 2.5 calculation. So you take your monthly times 2.5. Making sure that, let's see, I don't want to miss any questions. I've got a lot here. Does the 8-week time limit apply to round 1 of the PPP program? I thought it was 12 weeks during the first round.
I haven't seen anything about 12 weeks in my research.
Yeah, I haven't seen anything about 12 weeks either. Any insights on how to calculate payroll for a self-employed firm with no employees other than yourself?
That one would be a little bit more complicated. There's several questions that would need to be answered, like if you're actually on payroll and receiving a W-2, or if you're just taking owner distributions. For that case, I honestly would advise to talk to your tax accountant. They would be able to provide more information on your exact situation.
Good answer, Allie. I have partially disabled part-time employee on furlough. Should he be brought back to keep FTE up? So this actually ties in a little bit to our HR conversations that we've been having with folks too. So you certainly need to do what's best for your employees and your business. So if he is not able to come back to work, that I wouldn't bring him back just to keep your FTEs up. If he's not able to work, if there was a business decision for the reason that he's not able to work, I personally wouldn't make that choice, but that's another one where I'd want to like sit down with you and kind of work through that scenario and look through the options, rather than, I don't think I can give you a blanket answer like, yeah, bring him back to keep that FTE up. I don't know the scenario with the employee and why he's off and things like that. Okay. We have a lot of part-time employees who work under 30 hours. Can we count their payroll costs toward the FTE for loan forgiveness? We were just at 7:45 this morning. Allie and I were having this conversation. So if you can't tell, we are really into the PPP. So can you count them? So it's that calculation of their average hours. I might have to send you the calculation afterwards, but yes, the answer is yes. I will send everyone the link. I'm going to make a note because it's like you're going to divide their hours worked over the last 380 days or something like that. That's wrong. Don't write that down. But yes, you may include part-time employees as part of your FTE calculation, and I will send you what that is right after this call. Are overtime and bonuses able to be included in the gross wages portion of the payroll forgiveness? So, yes.
Yes. However, the bonuses, the lender will look at that. They don't want you to keep wages up. You can't like double someone's pay just to meet the wage requirement. It can't be an outrageous bonus.
As much as we would love one.
Yes.
All right. Todd asks, should we use PTO rate for commissioned employees, or can we give them more than their average PTO rate to make sure we hit our 75%? rate more than their average PTO rate. I think that kind of goes into what you just said, Allie. As long as it's not outrageous, you can pay them.
I would need to look a little bit just since it's commission, because there would need to be some type of correlation with the payroll reports that you're turning in with the lenders. But that would definitely be another case where we would need to look more closely at that.
What is considered utilities? Electric, gas, phone, internet?
Yes, to all of that. That is exactly what that is.
Is there any others that they didn't list? Electric,
I
gas,
don't believe,
water?
I need to double check this, but I don't believe cell phones. I believe it's just landlines is what I read.
Yeah,
like a company phone, like the one you see in an office. Yep.
Good questions, everyone. Thank you, Judy. If your payroll goes over the 75%, is it okay to go over to calculate the forgiveness calculation? Go over.
So if you're saying that, we'll use the example that's on the screen, that, you know, the 75% that I used was 75,000, your payroll costs were 95,000. Absolutely. You can use the entire PPP loan for payroll and only payroll. They just built in that 25% rule to try to help small businesses pay additional, like, essential bills. And so, no, you can definitely use all of the PPP loan for just payroll if needed.
Okay, thank you, Ted. Let's see. Must payroll amounts paid to individual employees that exceed 100,000 annualized be adjusted down to the effective annualized 100K mark for purposes of using against the 75? So let's say John gets paid $102,000. I'm thinking that Sean is asking, do I need to put his pay down to match? And if I'm understanding the question correctly, and the answer is no. You have to adjust it.
You wouldn't have to reduce the wages, but the amount over 100,000, so in Melissa's example, the 2,000, that proportionate amount for the 8-week period just wouldn't be included in the forgiven amount.
So you don't include it in your application. So we do have these two kind of pieces of the puzzle we're talking about. You don't include his 2,000 when you're applying in your payroll cost. You have to strip that out. In the forgiveness, it's not forgiven. So you might have other monies coming in, you know, a little bit of revenue or whatever it is, and you use that to pay John's $102,000. Or you're like, I have no money coming in, I have to use the whole PPP amount. That 2K above is not forgiven. Let's see here. Thank you, Sean. Brenda, when does the clock start in the 8-week period? I've read both loan inception, when the funds actually showed up in our account the day after we signed the final docs. I have read that it's when they're in your bank.
Mm-hmm. That's been kind of the consensus across the board.
Yeah, but I know that there, and like, amen, Brenda, because there is a lot of information out there, and with new guidance coming out, and even just yesterday, new guidance came out on certain topics related to this, and there's pages upon pages, and so I am trying to keep track of it all. So I would certainly echo your comment of, I've seen two things, which one is right? Okay, let's see. And Gretchen, we answered your question. Thank you for asking. It is okay to pay bonuses during this 8-week period. Yes, as long as they are not, and I know it sounds a little subjective, but they shouldn't be outrageous. But yes, you may pay bonuses. Okay, Kelly, I'm glad you asked this. This is something that I was going to dive into later today because I have an exciting day planned. We have not seen guidance yet about tracking expenses on a cash or accrual basis. Unless, Allie, if you have seen something, but I have not seen the guidance on this yet.
There hasn't been too much released from the SBA yet on guidelines for the actual accounting procedures of how they want this to be tracked. However, with that said, I did see that when it comes to payroll, you're looking at the day that the payroll actually happened, like the pay date. You're not looking at what the payroll cycles cover. So if it's like biweekly, you're not looking at like what that actually was. It's the day payroll left your, like, or the day payroll goes to your employee account is what's considered the payroll for this tracking. That makes sense.
So yeah, so if you were on a current or arrears, they don't care about that. It's, nope. I got paid on Friday, May 1st. That's my expense date.
Which that would be technically cash basis, but then they haven't really said too much about the other expenses for the accruals.
Thank you for that. So we will try to keep you posted. I'm sure the chamber will be providing more webinars like this too, and other, you know, accountants jump in if you know more. We're certainly not the end all be all on the PPPs. Okay, let me make sure did I miss? If you paid an employee for 40 hours a week, do they need to actually work those hours? Todd would like to know.
I don't believe so. If you want to pay someone 40 hours and they're not actually working, then I haven't seen that you're not allowed to do that. That's, I think, more on a employer by employer discretion.
Yes, and I would certainly, that also is a little bit in the realm of an HR topic too, where you probably want to weigh the pros and cons of doing something to that end. Because you don't have to spend all the money, which is one of our slides. If you're like my 5-year-old and you have a hole burning in your wallet when you get $5 and you just got to take it straight to the toy aisle, but we don't have to spend it all. We can give it back, which seems weird. But if you don't want to turn it into that 2-year 1% interest loan, that is an option, which is it. I haven't heard a lot of people really wanting to entertain that option, but I've read plenty of articles that say that it is an option. Okay, let me see here. I want to be mindful of people's time, so I do want to let the chamber let me know if, I mean, we are over our time. Oh yes, we are over, and they said there's so many questions here. What happens to the forgiveness? So this is going to be our last one. What happens to our forgiveness if you do not keep the FTEs at the right level?
So there is a formula that gets pretty it's a nice little formula that it will reduce your amount forgiven in proportion to the amount of FTEs that you did not meet. So it's not like you took out $100,000 and you didn't quite meet it all. They're not going to say you have to pay back that full $100,000 if you did meet some of the requirements. It's going to be a proportion of it.
And we'll send you the formulas afterwards. The FTE calculator, we'll send you that one for those part-time employees that work under 30 hours. So that's a promise we'll make to you. And then we'll send you that that FTE forgiveness formula. We didn't include it for the purpose of this presentation because it's kind of convoluted, honestly, and it's easier for you to dig your hands into it and just kind of play with numbers. We preferred to show you the tracking instead because really emphasis is on the tracking piece of it. So thank you so much. It looks like Julie is ready to take the reins, and we appreciate all of your time today.
Thank you.
I just wanted to ask a question too. What happens at the end of 8 weeks if businesses are not open again? Is it possible that the businesses would receive the PPP and then close at the end of 8 weeks?
So if close indefinitely or just close for more time? I just want to ask a clarifying question.
let's say for more time?
I mean, I haven't seen any guidance that says that if you use the PPP and you paid your employees with it, and then you had to close your doors for more time, that anything related to the PPP that you aren't forgiven or anything like that. I think if you uphold the guidance regarding keeping your payroll, to that number and keeping your FTEs, I have not seen that. Then if you uphold that during that time, I haven't seen, and then you have to uphold it forever, or in perpetuity, or for another 12 weeks. So I haven't seen anything to say that, but that's a good question, Julie. I would have to look more into that to see what they say about the next piece of time. Or
I would also check with your lender regarding that question, because they may have a little bit more guidelines since they're the ones conducting the forgiveness portion of it.
Okay. Well, fair enough. I know we have a lot of questions still, so I want to make sure that people feel free to reach out to Allie and Melissa directly and with their questions. And do you both mind sharing your email addresses for that? I know you're going to be sending, and we're going to be sending out things afterwards, but if you could share your emails, please. Oh, look at that. They're right there.
I clicked through a couple to get those. So yes, please do reach out. I mean, this is a lot of information to cover in a short amount of time, and the information is changing so rapidly, and everyone's situation is a little bit different.
Okay, well, we appreciate you spending the time with us while this window is open for the PPP. We are coming up at the end of time, and we do thank everybody for being here today. The webinar has been recorded, so you can check that out on our website after that gets posted. And be sure to keep up with us on social media. We want to thank Melissa and Allie from the Total Solutions team in providing us with really valuable information today. Again, I know we didn't get to all the questions, but certainly send your emails to them, and then we'll have resources that we'll send out directly to you after the webinar today. Thank you so much for joining us today. Thanks, everybody.